Hello. Today we're sitting down with Vanessa Xu, well, virtually. Vanessa is a contributor to FT Chinese. She is the executive chairwoman and the chief investment officer of a Hong Kong-based global asset allocation firm called VS Partners. Hi, Vanessa.
Good evening.
Hi,
Thank you
thanks
for
for
having me.
joining us. Yeah, thanks. Why don't we start with your career path, a very unusual career path from about 20 years ago when you first joined the financial industry as a M&A investment banker, and then to PE fund manager. And then some years later, you started your own business, a country fund. And then today, VS Partners is a global asset allocation firm. Could you explain the philosophy between some of these, behind some of these career changes? And when you wrote for us before, you mentioned you, as a financial professional, you examine mega trends, often trends lasting for decades, at least 5 to 10 years. Uh, do some of these trends, mega trends, also happen to coincide with your own career choice?
Thank you. I guess I was lucky that I had a career progression as a reflection of the much bigger times that we were born into and grew up with. And the last 40 years or last 20 years, to be precise, was a phase where China benefited from joining the global trade system and the global technology value chain and benefited from being a global manufacturer and taking a share in the global market. By and large, that was the phase in a U.S.-led world order that was featured with global peace to a great extent. And the peace dividend was the biggest dividend of the last couple of decades. So when I first returned as when China joined WTO, it was the phase of massive fixed assets investment that drove the commodity super cycle in the first decade of the 2000s. And I participated in a lot of landmark resources acquisitions globally and had the benefit to work through complexities of geopolitics and national competitions over that era, which turned out to be very helpful today to understand today's world. And after that, I turned to private equity investment in Zen, the largest global private equity, emerging market global private equity fund with Capital Group. I was the first female investor, joined that group in Asia, and witnessed how China industrialization and urbanization drove the regional growth in the Asia Pacific region in ASEAN countries, for example, Vietnam, Indonesia, and Philippines, and understood how value chains and industries deeply interdepends on each other over that period of time. And it was also a time that the private sector prospered in China as a result of joining a global economic and financial family and being the benefit of on the receiving end of long-term capital free flowing into Chinese entrepreneurial ventures and eventually send them to global public markets. So global investors in that era made a very decent return, but so that was a very couldn't be better for a bottom up deep research, long-term equity stock picker, which was the philosophy I was trained by Capital Group for, to start a country fund. And as a reflection of China joining the global financial system, it was added into many major indices starting from 2017. So we remember today as if it's been there forever of all the technology giant from China, consumer giant. Actually, they had a very short history in the global financial market, only started in mostly 7-8 years ago, and less than a decade long of history. And that's a very short history of massive change in less than a decade time. But that period of time, or peak globalization as some named it, has perhaps ended starting from 2018 when US-China went into a trade war, and the change of that old version of the global order was accelerated and exacerbated by the pandemic in the last 3 years, and more recently by the geopolitical conflict in continental Europe. So nearly 3 years ago, when the trade war started, I, as a country fund manager then managing global capital investing into China, asked myself a question: what was going to be the big changes that needs to be addressed, and whether the business model of a country fund can address those changes and those needs, and what could be the inadequacies and the challenges to the status quo, and what could be the opportunities out of it. So those were the questions that drove me to eventually decided to start a global asset allocator in early 2020, exactly in the middle of the pandemic.
Indeed, as you just mentioned, this is the end of peak globalization, and this process only seems to have accelerated with the pandemic, with a war, and now with some serious obstacles to the Chinese economy, with Omicron spreading across many cities on an unprecedented scale. So from a conventional wisdom point of view, this doesn't seem to be a very fortunate time to be starting your own business, focusing on cross-border investment. How is it going so far?
I actually think this is the greatest time to start what we do at the VSP here. And my friends joked with me, like, Vanessa, each time you started a new business, there was a crisis. And next time when you start something new, please let us know. And joking, when I started last time a country fund, we rolled right into the Chinese stock market crash in 2015. But as a long-term investor, when the market crashed, you could scoop up a lot of great companies at a very cheap valuation. And one just had to have a long-term view and really do deep research to understand the fundamentals of the businesses and not to be distracted by violent price action. So that was last the story. So to your question of creating VS partners with my fellow co-founders, precisely because of the status quo is experiencing this tectonic shifts underneath us, and the old way of how trade, how portfolio, how businesses is organized is crumbling because the old model is inadequate to address the needs of both global asset owners as well as Chinese asset owners. Therefore, it creates a vacuum that needs to be acutely addressed, but there is no supply of solutions or in the market to address those needs. Therefore, we decided to create a VSP. Let me elaborate what I mean by there is a vacuum that's unaddressed. The conventional Western asset management model looks at China in a, by and large, US-centric view. And that was a system using the MSCI index system as a proxy. There was a system actually reflecting the post-World War US-led, US-centric world order. And in that benchmark system, China was less than 5%, perhaps now less than 4% of the global index, which means that the financial capital market view is vastly detached from the reality, both on the risk side and on the opportunity side, certainly by a lot of measures that we can go on perhaps for 3 days about how important China is in the real world. That's not a 4% impact. And because of the Sino-US strategic rivalry, or even in certain areas, confrontation, that a conventional Western organization sometimes needs to explicitly or implicitly take a stance. And that impacted their ability and willingness to make long-term strategic commitment to China. The investment somewhat becomes opportunistic. So that's the inadequacies of the conventional Western asset management system. And conversely, because China's capital markets has not been opened yet, and the capital market itself indeed is very young, therefore there is a shortage of global talents. The bench is very shallow to provide global solutions, and most of the Chinese asset management organizations have their business onshore and have not branched globally. Therefore, they are not able to provide a global asset allocation solutions to the onshore investors. So, but the first generation of the entrepreneur who benefited from the last 20 years of peak globalization are entering into their middle age or late middle age, that they need to begin to think about the preservation and diversification of their renminbi denominated wealth, the global purchasing power of that wealth. So there is an acute need for them to globalize their portfolio, but there wasn't sufficient solution. So we set up a firm to address these needs from both sides of the aisle. And in short, I would summarize it as we look at China through a Chinese lens to understand its uniqueness, but express China in a global institutional portfolio, so that in risk management side, we manage it properly, and on opportunity capturing side, we research and capture it deeply from the local. That's essentially what I do. So, I couldn't be more thrilled of this, new way of China interacting with the rest of the world that gives rise to massive opportunities for us.
Right. When you talked about the inadequacies of the US-centric view and the China-centric view, indeed, both sides seem to be missing something even in this age of increasing decoupling. But this is basically a decoupling between Chinese and US interests, a lot of value chains and supply chains, technology. But both sides seem to be forgetting or not paying enough attention to the rest of the world, like Japan, India, Southeast Asia, South America, and the rising Africa. So even though the two big players are decoupling, what about the other players? I mean, you break some chains, you break some relationships, but other ones have to form to compensate for the loss of this. So how do you find opportunities in these new alliances, realignment of the end of peak globalization, but maybe something new will form in their place?
Indeed, there are this pessimism. The pendulum this year seemed to have swinged to the pessimistic side
Right.
about China because of the confrontations and in the tensity of the Sino-US or West US China relationship, which actually, if one just take out the emotions for a second, if the old order breaks down, then it cannot be left in a no man's land or in limbo. It has to be something else in replacement of the old order, which is what you described. The end of the last version of peak globalization, which is centered around productivity, efficiency of a very long global value chain that businesses and countries find the most efficient and value accretive link to maximize the benefit. But now the priority has shifted, again, accelerated by the pandemic, to securities, to equalities. Therefore, businesses and supply chains will be organized differently to be more local or regional. So that in itself is the other side of the same coin, which means the regional economy are going to be a lot more interdependent. The supply chains are going to be shorter. There will be more local players having the opportunities to replace imports on both sides of the aisle on a lot of the market. For example, Europe, US, and China all are building its own semiconductor foundry capacities, onshore or in the domestic market, which creates new demand for specialty materials, for softwares, for machineries, and also drive new designs of downstream products and applications. And these are massive investment opportunities as one example. And another example is the Russian-Ukraine situation reminded countries of energy security and energy independence. It will accelerate the development of alternative energies, in which China actually is a vital, critical supplier of the equipments. And that will create another opportunity for nations to work together towards a common goal of greener energy supply. So I think as investors, we often need to manage the emotions in the market. The pendulums always swing to the over optimistic side or the over pessimistic side. For example, in 2008, the pendulum swung to the over pessimistic side of the United States and of
Right.
the West, because the real estate debt bubble burst, and a lot of private sector households went into bankruptcy. And back then, there was almost no bad news about China, and China had a Olympic successfully held in Beijing. So
Right.
everyone was talking about everything was great about China. That wasn't quite correct either. And there were a lot of structural issues in China that needed to be addressed. And similarly today, there was no good news whatsoever about China. And I think the pendulum has swung to the extreme that we need to take a step back and look at the opportunities. This is not to say there is no risks. Obviously, there are a lot of risks. For geopolitics is one, the domestic policy shift is another, but there are ways to manage these risks. What's important is the runaway approach as to abruptly conclude that this is a market that's uninvestable, therefore we just leave it, and because it's small and only anywhere between 2 to 5% in a typical global portfolio, so let's just leave it. I think that a runaway approach is not a solution to any problem. It's a pretending not to see the problem.
Right.
It doesn't solve anything, right?
Yeah. Earlier, you mentioned the ingenuity of Chinese entrepreneurs. This usually isn't something financial people, bankers, and investors, they talk a lot much these days. The ingenuity, the tenacity, and the flexibility of Chinese entrepreneurs maybe are more noticeable to people with similar entrepreneurial experience, or people with many years of managing an actual business, be it a industrial business or a financial business, which happen to be the background of yourself and many of your partners, even though they may not come from a financial background. Is this something that may help you address the so-called inadequacies of the system or the Western-centric view on China these days?
Well, definitely. When I thought about this, the VS Partners business model, I reached out to my co-founders, and they loved it because they were industrialists, and they came from China internet background and veteran senior management for several internet startups, and came through exactly the last 20 years of peak globalization of importing US technology, US business model, and localize it and perfect it to supersede its US competitor in global market. And also our chairman, Mr. Shane Tejerati, he was the president of Honeywell Global High Growth Markets, and managed to grow a global technology giants business in over 30 countries over a long horizon of his career. Particularly, he spent 27 years in China as a Westerner who is not American, and understood perfectly the Chinese culture as to the local competition, the policy making process, how to work with the government, and a lot of the ambiguities to work through, but keep the eyes on the right ball, which is the long-term opportunity, and trusts in humanity. I think if we really dig deeper into what is the most reliable factor is that humanity, anywhere we go, when we bridge this people-to-people connection through our investment activities, being it's financier or entrepreneurial in any culture, humanity wants the same thing, that everybody being treated with fairness, with respect, with equality, and with benevolence. And these are the values that we held very dearly when we founded VS Partners, because it worked very well. It's non-political, it's not governmental. We have a neutral identity, but we uphold these core values, and anywhere we go, we can have a very deep discussion and mutually respected and accepted, or even embrace the discussion that speak the same language across culture, which I think is the reason why we could co-host this global CIO symposium for the first time as a private sector company together with FT and FTChinese.com, precisely was because of those very basic values in humanity in our industry that you saw. We have managers, fund managers, CIOs from different culture, from different strategy, from both gender, that come together to an event held by in China. And who would have thought? Okay, people would have thought, well, nobody wants to come to China, talk about China. That wasn't true. We proved that it wasn't true if we bridge this people-to-people connection.
Right. Talking about the CIO symposium from last year, one of the most impressive aspects of that event was we had several very impressive female fund managers or prominent female investors, not just in areas like ESG, but also in very hardcore sectors like energy, health. So again, this is a kind of a cliched question. Even given all the progress in gender equality in the financial industry over decades, this is still a heavily male-dominated industry. And being a Asian woman, a Chinese woman, working in this field, working very closely and competitively against big whale investors from all over the world. What are some of the top challenges that you have to face, and how do you resolve them?
Well, I guess there are a lot of challenges that over the years that I forgot because I really love my job, and I never thought about myself as a female professional to start with. I thought about myself of what this position requires of any professional to do it well and do it right. And my first job as a commodity energy industrial M&A banker, that was even more masculine than a public market investment. I've been to a lot of very exotic places with my coworkers, and in a very heavy asset base space. But you just have to. I think what I learned over the years is to really have a global view,
Mm-hmm.
and not to let the country background or the cultural background cloud the ability to emphasize and the openness to accept and understand any other culture and any other markets and any other industry or country that I'm not familiar with. When I firstly joined the Capital Group, the second day after I checked in, I was sent to Singapore to cover India market, and I traveled through a lot of places in India, which was a very foreign culture to me, and to study the several local industries. I think keeping a courageous, open mind to embrace anything that's new, um, that helped me a lot, so that I forgot there could be any disadvantages of being a female in investment. I think the depth of thinking, the independence of thinking, and objectivity, and the decisiveness of take informed risks, etc. And these are the characteristics of this profession. And as long as someone has these, I can't see why that person cannot be successful. And today that I'm a founder of our own business, and I'm glad that I can have the opportunities to help and support and advocate for the female career in investing community. So that I invited these fellow female investors to the symposium. I certainly will try to do more of that, to the extent that I can. And also, I really wanted to, say at this platform to the audiences, and there is no such thing that females cannot do certain things, being it investment or any other profession. I personally did not believe that, and one just have to believe in yourself and work towards what that goal requires of anyone, and you can be successful.
Great, thanks. One last question. So today we have talked a lot about paradigm shifts, uncertainties, challenges, and risks. But what are some of the certainties? I think you mentioned a few things earlier, but as advice to fellow investors and market researchers, what are some of the certainties that even in this day and age that you can count on, especially when it comes to China, since this is still our focus? Certainties that you really want to focus on that maybe others are more or less overlooking these days?
Well, that's a great and a heavy question, certainties. And one thing I learned in this profession is the only certainty is uncertainty. So embracing uncertainty and is the definition of a investing job. So one, maybe two certainties I will offer to talk about. Number one is that volatility in a highly unpredictable world, because of the last phase of the world order is morphing into something else. So we are going through several vectors of a tectonic landmass shift underneath us, and they work towards different directions. And this is a long historic process that will last for decades, not even 1 decade. Therefore, trying to predict the direction of it sometimes could be a fool's errand. And what we can be sure is that these tectonic shifts will bring very big volatilities into different asset classes, to different markets in ways that we can unpredictable. So when we are mentally prepared for this uncertainty, remember, because of the global synchronized central bank easing over the last 15 years, since the global financial crisis, that the world by and large was in a low volatility regime. But now the certainty is that we are moving into a high volatility regime. Therefore, regardless of how we invest in any country or any asset class, conventional asset class, adding volatility as a third, as another pillar of the portfolio, perhaps is a very valid choice. So that's number one. And number two, particularly about China, I do believe that the market economy, the opening and the reform belief and the DNA, the desire for a better life through owning personal property, private property, is deeply embedded in the DNAs of Chinese people. There will be, policy swings, headwinds. There might be, ambiguities and business cycles or macro cycles, political cycles, etc. But this deeply embedded DNA of believing the opening up that was from the Deng Xiaoping era, I do believe it's still in there. Therefore, it will inspire generations and generations of entrepreneurs of their ingenuity to create something new, even in a very difficult time of such massive transition from one type of world order into another. We talked about a little bit in your previous question. That ingenuity will still be there. So we will be able to find great companies out of a very difficult time. And I do also remember in each time when there is a crisis, the crisis itself force correction. And so I do believe that this time there are a lot of difficulties, and these difficulties, this crisis will force change. So I am hopeful for that, and these are the certainties, relatively speaking, the certainties that I think people can count on.
Great. Let's end on that optimistic note then. Thanks a lot, Vanessa, for sharing your very deep, heavy thoughts with us. But I think this has been a very informative session for our readers. Thank you very much.